Welcome to the Good Boy Morning Show. Good to see everybody. Today we're going to be taking a look at is Bitcoin stuck? Is it stuck right now? Seems can't break out of this range between 100 and 106,000. And what's it going to take to get it to the next level? So, all right, let's go ahead and get started. Okay. Hit that refresh button. Okay. Market cap is now $3.582 trillion. 24-hour volume is 190 billion, almost 191. Bitcoin dominance 57.6%, ETH dominance 11.7%. I think that's about where we saw them get. Here's your visualization of the market cap. Your visualization for your trading volume. Uniswap trending big time after don't know what that is. And we looked at Bydfi. Okay. Been around for about 3 weeks. That's some kind of decentralized platform. Hold crypto or using crypto while having full control of your funds. Huh. Sounds interesting. Spend it, don't sell it. Your crypto Visa simply hands you a credit line with matching spending power. That's coming soon, okay? All right. Well, it looks interesting. Looks interesting. And then I know what Lisk is. Lisk is an older project. Okay. All right. Right now, Bitcoin is at $103,399. It's down 1.7% since yesterday. Ethereum at 34.74. It's down also 1.7% since yesterday. XRP had a decent week at least. Not a good 24 hours though. It gave back about half the gains it made yesterday morning. BNB is at 973. Solana is at 160. Tron at 30 cents exactly. Dogecoin 17.63 cents and ADA 57.25 cents. And then you got white Bitcoin coming in here. Russian money laundering exchange, I think. Could be what that is. But it is at $54.32. Chainlink at $15.77. Man, our sweetie has fallen all the way down to number 30. Okay. The biggest gainers of the hour. The Canton project showing back up. Canton Crypto, I think it's called. Quant up 2.5% last hour. Barely hanging on to the top 100. And WLFI coming in 1.2% up. Uniswap back up to number 35 for a pretty big day yesterday. 7.5%. I don't have any stories on why that happened, but 69% for the week, 39.8% for the 30 days. Quant up 3.8%. VChain up 3.1%. VChain down to number 80, man. Golly. It's had a rough couple of years. Pum.Fun coming in 2.1%. Tron at 2%. Astro 1.9%. There you go. So you got the biggest gainers for the week. Filecoin, 61.5%. Of course, the Uniswap up there at 69%. Near Protocol at 41.2%. Render up 23.3%. VeChain up 22.5%. And Polkadot, Zcash. ICP is leading the charge for the month. It's up 89.9%. Taking the lead off from Zcash, which is 86.4% up. They both had a rough 24 hours here. And Filecoin, 48.2%, same thing. Uniswap. Let's see what's going on with Uniswap. See if there's any news on it. Oh, happy Veterans Day to everybody, all our veterans, of course. Here it is. Uniswap token soars amid fee switch proposal to align incentives. Spike took or followed protocol's unveiling of a sweeping overhaul, including fee activation and perpetual token burn to boost liquidity. Uniswap has proposed activating protocol fees and funding a perpetual unit burn, including a one-time retroactive burn of about 100 million tokens. The overall aims to channel the DEX's sizable fee token or fee revenue to token holders, addressing a long standard value gap. New mechanisms, MEV discount auctions, and front-end fees, and V4 aggregator hooks seek to deepen liquidity and expand revenue according to the proposal. So that's what's going on with Uniswap, if you were wondering, like I was. You have several in the 15 to 35% range, all good weeks or good months. But Tensor having a bad week, but it's up 12.4% still. Okay. All right. Here's Bitcoin. We have a line right here. That's not what I wanted. Could break up out of this, break up to the upside here. That's where it's at right now. We do have a Litecoin trade going on right now. You guys can see. If you guys want to trade at Phemex, please do. Use my link, and I'm about 2,000 in this trade. Use my link. It'll help you with, it should have KYC and everything like that if you just use my link. I have an old link. It's been around for a long time. And so if you sign up with it, maybe you don't have to do KYC. I don't know. It's just a rumor I heard. But we've got all those links down below in the description. I need to figure out a way to get my links to Twitter as well. Starting that tomorrow. Okay. I hope it breaks out of this soon. Litecoin trade, if it does. Bitcoin trembles at the $100,000 mark. What's keeping pressure on the price? Bitcoin's price trembles around $100,000. Fed rate cut failed to catapult price higher. Here's what's keeping the price down. Bitcoin is not looking great now. Right now. Traders kicked off the year by being told that the top cryptocurrency price would skyrocket $200,000 before the end of 2025. But investors now find themselves watching it tremble around $100,000. Rather than confirming expectations that the price would surge in October failed to materialize. I really still push back on this idea. We hit a new all-time high in October. So some make it sound like it was all bad. Instead, we just saw the run-up that comes at the end of the month and the beginning of the month, and it corrected. But instead, traders saw the total crypto market shed some $800 billion of its value, roughly 19%, which back in 2017, that was all the volume completely. So put it in perspective. Bears have clearly now been in control, The market now seems to be tipping again, chopping around the $100,000 critical level, a zone that continues to be defended firmly. The level is not technically important, but also a major psychological threshold, which I do agree with. The plunge in market confidence comes on the back of what should have been a victory lap for the crypto industry after a record 2025. Since President Donald Trump took office in January, he'd been busy ticking off items on the industry's wish list. If you read Silk Road creator Ross Ulbricht, Pardon Binance co-founder Changpeng Zhao, or CZ, signed pro-crypto executive orders and signed a landmark stablecoin bill into law. Yet the price plunged. Even the Federal Reserve decided to cut interest rates in October, which is usually bullish for Bitcoin's price, failed to drive the price up because it was already priced in. And analysts are losing hope. Galaxy Digital analysts now say the price may only manage to drag itself to $120,000 before 2026. They previously said Bitcoin would hit $185,000 ahead of January. There are several reasons why confidence has been zapped from the market. The crypto industry is still reeling from the October 10th crash, saw some $20 billion in liquidations, as well as $120 million balancer hack on November 3rd. Yeah, we saw $20 billion in liquidations, and the price is about right now what it was at the bottom of that liquidation. We've already seen prices go lower, so we've seen it stabilize some. I mean, you think about it, you got a gigantic wick that's very unstable. It's very volatile. When you go down and you hit it naturally, like we have since then it's a little easier to bear. Another part of the problem, according to James Butterfield, head of research and digital assets firm CoinShares, is that traders have failed to update their playbook. Some long-term investors appear to be acting on the 4-year cycle narrative, self-fulfilling pattern we do not subscribe to but cannot ignore. Adherents to this framework are locking in profits, convinced that the cycle top is approaching. To him, this mindset explains why many big investors have sold their positions and driven the price down 19% since its 126,000 highs at the beginning of October. Which I did nail that $125,000 prediction. And it's not just crypto traders that are feeling a bit down in the dumps. American consumers' sentiment about the future prospects have plunged to nearly record lows. Rising inflation and unemployment, coupled with Trump's trade wars and the longest-running government shutdown ever, darken their mood. Add to that, there are also fears whether the artificial intelligence bubble will burst, which also weigh on global markets. Even so, market watchers remain bullish for the long-term prospects of crypto. While the pullback is likely to rattle some investors, volatility of this scale is not unusual. The Bitcoin dropped from 109,000 to 74,500 between January and April, before rallying to reach its latest all-time high price. Arthur Hayes, the co-founder of BitMEX, said on November 5th, he expects the price to hit $1 million around 2028, provided that governments keep issuing debt to pay for themselves. But for Bitcoin to bounce back, Sean Dawson, head of research at perpetual trading platform Derive, said it needs no more bad news to strike decentralized finance. No insolvency announcements, nor hacks. No insolvency announcements nor hacks would reestablish trust in the market. I think you have to have a neither for a nor. I digress. So there you go. So that's why Bitcoin's stuck. America crypto ETFs get green light to share staking rewards to millions of investors. This is big news. U.S. Treasury and IRS authorized crypto ETFs to stake digital assets and distribute rewards to investors, establishing tax framework that removes institutional barriers while mandating quarterly distributions. The U.S. Treasury Department and IRS issued sweeping new guidance allowing crypto exchange-traded products to stake digital assets and distribute staking rewards to retail investors. Treasury Secretary Scott Bessent announced the move would increase investor benefit, boost innovation, and keep America the global leader in digital asset and blockchain technology. Guidance comes 2 years after the then SEC Chair Gary Gensler suggested proof of stake tokens were securities. The new framework provides tax clarity for staking in ETFs that hold the same proof of stake tokens, with the IRS establishing a safe harbor under which crypto ETFs structured as a grantor trust can stake without incurring corporate taxation. And this is the tweet from the Treasury Secretary. According to the IRS, the safe harbor imposes strict operational requirements on crypto ETFs that pursue staking activities. Funds must stake through unrelated professional providers, and yada yada. This is just a little bit about how it actually works, which probably people don't actually care about. Alison Mangiero, head of staking policy at the Crypto Council for Innovation, stated that the guidance removes major barriers preventing institutional participation in staking. It also affirms what the market already knows. Staking is here to stay. Thoughtful policy can ensure it thrives responsibly in the U.S. The guidance is not only concrete. This guidance not only concretely builds on the SEC's recent staking stance, it also shows that its Treasury is delivering on key areas of focus outlined in the President's Working Group report. Treasury guidance builds on the SEC's Division of Corporation Finance's May statement, verifying that certain protocol staking activities don't constitute securities. Yada 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 yada. I mean, that's definitely a boring one, isn't it? Okay. What's up, TJ and Brian? Thank you for being a mod to the channel. Appreciate you being here. SoFi rolls out crypto trading for retail customers. Fintech bank SoFi rolled out crypto trading to retail customers on Tuesday. The move sets the pace as the first of several national banks planning on similar moves in the coming months. SoFi previously gave its customers the ability to buy, sell, and hold crypto through the app, but it agreed to shutter that service 2 years ago to obtain approval for its national banking license. Starting Tuesday, select retail customers can again trade Bitcoin, Ether, and other crypto assets. The plan is for all of SoFi's 12.6 million customers to gain access before the end of 2025. Today marks a pivotal moment when banking meets crypto in one app. It is critical to give our members a secure and regulated way to step into the future of money. High-era regulators largely discouraged banks from delving into crypto. U.S. bank regulators have swiftly reversed that stance during President Trump's first year in office. In May, the Office of the Comptroller of the Currency clarified that banks can engage in crypto custody and execution activities, following similar guidance from the Federal Deposit Insurance Corporation, or FDIC, earlier in the year. In the coming months, several major U.S. banks, including Charles Schwab, Morgan Stanley, and super regional lender PNC, are expected to follow SoFi's lead by offering retail customers trading. SoFi Stadium. Let's see. Along with Robinhood Markets and Coinbase Global, both non-bank companies with far longer tenured crypto trading platforms, SoFi is pursuing the goal of offering a one-stop shop or everything app for financial services. Wow. About 60% of SoFi's customers say they prefer trading and holding crypto with a licensed bank over a primary crypto trading platform, according to the company's survey results. So there you go. Ripple Labs is conquering crypto. Now the XRP-linked firm wants to take on traditional finance. There's the XRP people. Where are you at? XRP Army in the chat. Are you in the chat? Are you still around? Is the XRP Army still around? That's a good question. Ripple app has become one of the world's largest cryptocurrency companies, but executives aren't stopping there. Brett Garlinghouse told CNBC. The firm has ramped up efforts to bridge the Web3 world with an industry that has long been fueled as its foil, traditional finance. In an interview with CNBC's Crypto World at the Ripple Swell Conference 2025 in New York, Garlinghouse said his firm aims to offer a wide range of traditional financial services built on blockchain infrastructure, capitalizing on growing institutional adoption of digital assets. You guys smash the like button, please. Blockchain is a decentralized ledger that logs transactions across a network of computers. I want to see Ripple invest in the future and get ahead of where the market's going, Garlinghouse said Tuesday. Ripple has been on a $4 billion acquisition spree in hopes of building a financial services powerhouse. 2025 alone, buying prime brokerage Hidden Road for nearly $1.3 billion in April. Software firm G Treasury for more than $1 billion this fall. Last week, it launched Ripple Prime, a broker to offer U.S.-based institutions access to over-the-counter spot trading across several tokens. Raised $500 million in fresh funding and lifted its market valuation to $50 billion. Ripple's bid to deepen its push into traditional finance comes as institutional demand for digital assets grows. Security and Exchange Commission and CFTC dialing back digital asset regulations this year under President Donald Trump. Self-styled crypto champion. Self-styled? Came out wearing a Bitcoin hat. Bank of America and Citigroup have become actively exploring stablecoins, with Citi recently unveiling plans to launch a crypto custody service firm for 2026. On top of its own services, Ripple also aims to sign deals to lend its XRP Ledger technology to larger institutions and crypto pushes. Such partnerships could prove to be a boon for XRP. Let's see. XRP is traded sideways for much of 2025. And as Ether and Bitcoin sailed to records of especially 4,900, not 39, and 126,000 respectively. But high-profile partnerships might push up the price of XRP. We saw it yesterday. Deal making with traditional institutions is likely to remain difficult due to stalled efforts to create guardrails for cryptocurrency companies. So there you go. China accuses U.S. of stealing 127,000 Bitcoin in high-profile crypto hack. CVERC claims the hack was conducted by a state-level hacking organization and suggests the U.S. was part of a larger operation involving the same attackers. China's National Computer Virus Emergency Response Center, or CVERC, accused the U.S. government of seizing 127,000 stolen Bitcoin, worth $3 billion, that were originally hacked in 2020 from a Chinese mining pool. CVERC claimed the hack was conducted by a state-level hacking organization and suggests the U.S. seizure part of a larger operation involving the same attackers. The U.S. government disputed CVERC's claims, maintaining that the seizure was a legitimate law enforcement action targeting criminal proceeds, while China sees it as a provocative act of escalating tensions between the two nations. So basically, the U.S. busted a hack. It was 127,000 Bitcoin, worth $13 billion. And China is saying, this was done by a state level or government level organization. The U.S. is part of this somewhere, and you stole our 127,000 Bitcoin that was hacked from our people here in China. That's what it's saying. This is what I would say to that. I don't know much about it, but what I do know is possession is 9/10 of the law. So if they have them now, China's unlikely to ever get them back. At the time, the coins were tied to Chen Si, chairman of Cambodia's Prince Group, who is now under U.S. indictment for allegedly running a large-scale crypto fraud scheme. For nearly 4 years, stolen Bitcoin remained untouched. Then in mid-2024, the stash was quietly transferred to new wallets. Blockchain analysis firm Arkham later tagged those wallets as belonging to the U.S. government. CVERC's analysis challenges the U.S. narrative that the funds were criminal proceeds. Instead, the agency claims the seizure may have been the final step in a long operation involving the same attackers behind the original theft. Well, you should have got them yourself. That's what I have to say. Digital asset treasury inflows plunged 95% as institutional crypto appetite fades. Weekly digital asset treasuries inflows fell over 95% from $5.5 billion in July to $259 million in November, signaling fading institutional interest. Bitcoin dropped 10%, while DATs saw losses starting at 40%, widening the performance gap and raising red flags for investors. DAT managers now face tough choices between stopping accumulation or accepting unfavorable financing to maintain growth. Recent market turbulence has tested institutional conviction. While many expected a strong rebound in Q4, that hasn't materialized. Tariff-induced crash hit the market hard. Assets like Bitcoin and Ethereum have struggled to reclaim their previous highs. Slowdown in momentum has affected altcoins. I guess this was all Michael Saylor. And then, somebody else jumped in the game. Didn't tell us what this is. Okay. Crypto queen who fled China for London mansion to be sentenced to over $5 billion Bitcoin stash. Wow. A woman said by police to have bought cryptocurrency now worth billions of pounds using funds stolen from thousands of Chinese pensioners is due to be sentenced this week for money laundering. After fleeing China, she moved to a mansion in Hampstead, North London. The Metropolitan Police raided a year later and made one of the world's single largest crypto seizures. More than 100,000 Chinese people have invested their money in her company, which claimed to be developing high-tech health products and mining cryptocurrency. In reality, she embezzled the funds. How is she so good at it? As she awaits sentencing, investors have told the BBC World Service they hope to get at least some of their cash back from UK authorities. Anything left unclaimed would normally default to the US government, or to the UK government, leading some to speculate that the Treasury could stand to gain from the haul. She posed as a wealthy antiques and diamond heiress and hired a former takeaway worker as her personal assistant, who she has to trade the cryptocurrency into other assets such as cash and property. Wow. All right, guys, that is all we got for today. We're not going to look at this story today. Hope you guys enjoy your day and have a good one. Good boy.